Jumping over to volatility. So we did see realized vol continuing lower. Despite the move down, we had about a 5-6% move down on Thursday last week on this US crackdown news. Realized vol's kind of drifting lower. And implied vol, on the other hand, did spike, and it particularly spiked yesterday ahead of CPI. And when we were trying to test the local lows in crypto, we did have a little pop in that front end. Now that is going to subside now. We've had CPI gone and the market's held in there. So expect that front end to come crashing pretty sharpish as we speak. And we would expect, curves might have a chance to fall back into contango, but they were a bit flatter going into that CPI. Carry wise, back up to 17 vols as well. Not really a sustainable level. We do think that's headed lower. So don't be surprised to see that front end lose a good 5 to 10 vol points in short order if Realize can't materially rally. And for now, it doesn't look like Realize is doing a whole lot. Term structures, as we said, were flat. I think they will slip back into contango. The ETH Bitcoin vol spread is around 15 vols, continues to shift higher. It's being justified by the Realize right now, which is coming in at about 12 to 15 vols higher as well. So, I do think until this Shanghai upgrade's out the way, you're probably going to struggle to see this spread go below 10 vols. And it may even keep grinding higher and even get to 20 vols if Ethereum can manage to keep putting in reasonably big moves and putting in some outperformance or even underperformance on the downside. Then I wouldn't be that surprised to see that vol spread hold in there. We haven't really got any of that on, to be honest. I was looking for cheaper levels. I was being a bit greedy to get into that trade, so kind of missed it there. But it does, given that spread, if you are looking for upside plays because you think this sort of crypto retracement is a buy the dip opportunity, you think net liquidity is turning higher, you think crypto is a way to express that, then I think Bitcoin upside is probably where you want to go to. So you don't have to pay that extra vol premium for Ethereum, and you don't necessarily get subject to the regulatory noise that might be ongoing for some time. All right, moving on to SKEW. Little change in Ethereum SKEW, but we have seen Bitcoin SKEW continuing to push higher for puts. So reversing what we saw in January. And we said, longer dated, we didn't think it made a ton of sense that calls were still holding a premium. That has started to push back down towards puts. It is still a little bit of a call premium in the back end, 6 months and longer. We don't think that's going to last for very long. It's going to continue to head back that way. But the front end is still at a premium for puts. It has stretched to about a few vol points now. And whilst we think, and we said this last week, we actually think that the SKEW is probably the wrong way round in the front end, right? In Bitcoin, Ethereum may well have more downside now because of this regulatory noise, but in Bitcoin, the positioning setup is such that dealers look like they're short on the upside, and we actually think that there is risk that we could have a quick charge to 25k on the upside, and then we probably see that SKEW in the short date flip towards calls again anyway. So that's kind of our sense from what we're seeing in SKEW and where we think the opportunity might be. Obviously, it makes sense that SKEW did richen up this week because people kind of threw in the towel on call option positions that they had as markets started to roll over. So you see that supply of calls come from people who sell back out the calls that they might have bought just to get some premium back, and then some put protection buying came in as people who hadn't already hedged came in for hedges, right? So that's the flows that are driving it. But if we think about where the material upside and downside risk probably is in the near term, I actually think the upside risk is probably a little bit higher right now from these levels. Obviously, if we break that 20k level, then you might see a proper change in that dynamic. But whilst equity markets aren't falling out of bed either, and that liquidity function, like we said, is turning up, we think there's potential there. Okay, dashboard wise, nothing really to call out. Peruse that at your own leisure. You can see obviously Strategy Compass saying buy calls in Bitcoin, also saying the same thing in Ethereum, just because percentile wise, vols are still pretty low here. And obviously spot is kind of at the lower Bollinger Band kind of levels, right? So that's what the Strategy Compass is pointing out. If we take a look at flows, Bitcoin option volumes did come down to about 2 billion odd this week. So half what they were last previous few weeks. So as spots faded on the Kraken headlines, activity and volumes are fading in options as well. Upside calls were closed out between February and March expiries in the 24 to 30k range. That's where people have piled into a load of upside, and that's what they were dumping. Call spread, we did see some call spreads get bought in the 26k to 30k on March expiry. So that gives you a little bit of leverage to an upside move if we get it. Put protection got bought in the form of 17th of February, so that's this Friday, 21.5, 21K put spreads, so 500 point wide put spreads, very tight put spread there in the short end. And then the March 21K puts outright were also bought in a decent clip. And then the largest clip we actually saw was in Bitcoin options, was the March 23 SEP 23 diagonal call calendar spread, where someone was selling the March 36K calls to buy the September 60K calls. These are way, way out of the money options. So, you know, I don't know exactly what people are trying to do with this, but that's a big clip to go up in the SEP upsides. Even though they're low premium, low delta options, it's still quite a big clip to go up. And it's probably what it's worth flagging. Okay, if we go over to Ethereum flows, they did start off bullish last week. Excuse me. February 1,700 and 1,800 calls were kind of the purchase of choice to kind of play the chase higher if we were going to break that 1,650 level, which didn't end up happening. April bullish risk reversals also trading, selling the 1,400 puts to buy the 2,400 calls in April, taking advantage of that put skew to get long. Then as spot rolled over, we did see flows turn more bearish. We saw put buyers come in February to April expiries in strikes from 1,500 all the way down to 1,200. So that's your, usual sort of dynamic where people rush to the front end protection. And then we also saw a decent clip in March 23, June 23, call calendars around the 1,800, 1,900 strikes, selling the June leg there. And we've seen flows like that in previous months as well, where this March, June calendar seems to be getting sold in quite big size. There seems to be some sort of trade out there that a fund is doing, and they're just kind of bringing their strikes down gradually with the market and through the passage of time. Okay, looking at gamma positioning, dealer positioning. So both Bitcoin and Ethereum dealer positioning looks fairly neutral here. But if we break it down, BTC dealer gamma is pretty spot sensitive. It looks like the main long strike is coming from the 21K strike in the 24th of February. So not this Friday, but next Friday. But there's plenty of short upside strikes in February, all the way up to 25K. So we do think that if we were to rally above, say, 22.5K, the dealers are going to flip back towards short again in Bitcoin, and that could fuel a bit more upside. Maybe over the weekend in a quiet tape, there's room for more squeeziness like we saw in Jan. Now, if we look at Ethereum positioning, it's quite neutral as well here, but dealers appear to be short the local stuff that expires this week and next week in the local strikes, but on the upside in March and in June, they are long. So it's quite a different dynamic, right? Where actually they're shorter gamma here and lower, but if we rally, they move away from this short local gamma and they go towards long strikes on the upside. And so they're actually going to be longer gamma on the upside. So it basically, the positioning setup suggests that Ethereum on the upside shouldn't really have that much volatility, whereas Bitcoin should. But obviously we've got the whole idea that ETH might have the catalyst with the Shanghai upgrade, so that could turn that on its head. But purely on positioning, we would say that, ETH should basically find a bit more resistance in the rally. Okay, so that's what I'm thinking, which again is kind of leading me to want to buy upside in Bitcoin rather than Ethereum from this particular point in time. All right, and that's kind of it. That's it for crypto this week.